Hi, Dom. Thanks for joining me. Very excited to have this chat with you and share with our audience. You are one of our biggest backers at Tractor, and we're very grateful for your support. You're also a very successful founder, and you've done many, many things. I'd love for you to give us a bit of an intro. I'm sure most people know your story, but for those who don't, I'd love to hear it.
Yeah, no worries at all. Probably worth saying that most people know me as the co-founder of Up, which that's fine. I am the co-founder of Up, but which is Australia's fastest growing bank, and it's a digital only bank, and that's awesome. Worked with some of the greatest people in my career at Ferocia who built Up, but I also started a bunch of different other companies like Pin Payments, for example, and the Clear Grain Exchange, and a bunch of others. They're all on my website. And so what happened during COVID was I sold 3 different companies, and that gave me a pool of capital. And with that pool of capital, I was then able to start the family office and invest directly into other businesses. And I have actually been investing for about 25 years, so it's not a new thing for me. But now I have a lot more capital to be able to do it sort of in a more Judy calls it directed abundance, like being able to focus on the things that we care about. We say elevating the entire ecosystem, helping Australian startups to be better and to be world class. And then we also invest in funds as well, which means that we sometimes end up in the same company many times through different funds as well as directly. So yeah, that's pretty much who I am and what I'm doing. I should say that the things that we invest in might be worth mentioning because it gives a little bit more flavor and context. So we back female founders and other underrepresented founders who don't have the same access to capital. Most of our investments will consider that lens, and then we also invest in women who run venture capital firms. So that's pretty awesome. Then we all, and then I'm like Mr. FinTech, so we also do FinTech, which is primarily most of our investments sort of FinTech, and climate tech is something I've been doing for about 25 years as well. So that's our 3 main things. But the other thing that has happened along the way is we ended up sort of doing the picks and shovels, like the infrastructure, the startup infrastructure, and we usually call it things like startup operating system or providing the tools for high growth startups that high growth startups need. So actually Tractor falls into many of those categories. I'd say obviously yourself as a female founder, then we've got it being FinTech, being about money, and then also providing part of the operating system for startups in Australia, the capital that they need. So Tractor fits really in the sweet spot of what we invest in. I mean, if you did some climate, you'd be absolutely perfect.
Maybe one day. It's awesome. Actually, just hearing you explain it today, like, where does that generosity come from? Because you probably do more than any one other single person for this ecosystem.
I mean, it's a good question. I think it's just the nature of the beast. I've always been about helping other people, and whether they're employees or business partners or family or colleagues or other people in the industry, I've always just had this feeling about helping other people, and by doing that, by being generous and selfless, I've actually found that it's helped me in my career, and it's helped me in my life, and it's helped me not only make friends and retain friends, but also get employees and retain employees, and get business partners and retain business partners, and be successful in investing and all of those things. And whether or not they're related, who knows? But I do feel like being able to have that compassion and empathy for others has really just sort of become really who I am. And so now with Judy on the team and with Sarah, our executor of awesome, we've been able to do that in a little bit more scale than like just one Dom. And I hope that in the future, as we build AI, build technology and build platforms and systems and things, we'll be able to actually have a bigger impact than we can now as a small team of 3 people. But yeah, it's just sort of who I am, really.
Yeah, it's amazing. And you've had big teams before, so this is a small team, but it's you've had many big teams before, and I know that we've spoken about this before, and that you've had a very loyal following of employees and business partners, as you just referred to. I'd love to understand, like, what are the key things other than the generosity? Like, what are the key management techniques that have helped you gain that loyalty?
I think it's a passion for the human condition, really, like loving people and understanding people. And for me, culture plays a really big role in that. And my business partners have always complemented my skill set. And even in my personal life, my wife, complements my skills and abilities. I think that we used to say all the time, 1 + 1 = 3. If you find sort of the right ingredients, then you can have an outsized impact. And what I've found along the journey is that caring about the people that I work with, who their partners are, what their kids' names are, what their dogs and cats' names are, or tortoises and galahs, or whatever they have as pets. All of those things, on the one hand, friendly and compassionate, but on the other hand, very, very strategic to build those long-term relationships. I've got examples of people who have worked with me for 20, 25 years across 5, 10 different companies. And we just keep sort of end up working on the same things because we love working with each other, and we don't need resumes, and there's already that trust, and it only scales to a certain point. Like if you're going to work with your mates, there's pros and cons. It's like a double-edged sword. But for me, I've been able to extend my friendship group to thousands of people. there's obviously my very close-knit friends that I went to kindergarten with, and we still our kids are growing up together now and that sort of stuff. And then there's my colleagues and acquaintances that I've sort of, I guess, befriended over the years as I've lived in different countries and traveled around and worked on different projects. And I find that a lot of those people, it's like karma, like, good karma sort of goes around and comes around. And so by treating people with respect and helping people to succeed, then maybe a decade or two later, they say, "Hey, Dom, I heard you're doing so-and-so, can I help?" And, it just really creates this sort of fortuitous love triangle, or, like everyone's sort of helping each other and, looking at. So we used to call it as a joke, Dom Enterprises, because there's so many intricate links between PIN payments and Bill Kite and Tractor and Ferocia and Up and all these companies. They're all the same people, trying to help each other over decades. So, and nowadays, Judy's been able to consolidate sort of what's in my head and turn it into processes and systems and help to scale Dom. And so now Euphemia is actually my name, like my surname Pym. It's the Greek origin of my surname Pym. And so, so the name actually has some meaning as well. And so Euphemia can create lots of Doms over time. And Up was the same. Like Up, when we sold the company Ferocia, what we tried to do was make as many millionaires as we could. Not like because we're, Silicon Valley bros or something like that. But the reason that we wanted to do that was so that each of those people could pay off their mortgage or pay for their kids' education or start their own startup or invest in other startups. And so when you look at something like PayPal, where the first 22 people represent now $4 trillion worth of wealth in different companies, it makes you think, well, why can't we do that in Australia with Canva and Atlassian and Envato and Real Estate and Seek and all these sort of great companies that we've created, Airwallex and Afterpay, and like why can't these great companies then create multi-generational wealth that then feeds back into the startup community? So that's been how to scale Dom,
Yeah, brilliant. We need that. And I think we're all human too. So it's just that human interaction obviously like goes a long way. We should get onto funding because that's what we're talking about here at Tractor. And I'm curious, and I've heard a little bit of this story, but how you looked at funding when you were growing up, because that obviously needed a lot of capital. I'd love to hear, what your thinking was around that as you were growing that company.
Yeah, so maybe I'll put it into perspective for people. I've been, quoted publicly many times saying that if you start a new bank, you need about 100 million in reserve capital and then another 100 million in runway. So if you're going to raise anything less than 200 million, you're putting your bank at risk, and it's a lot harder. So we went pretty hard and raised nothing. So we bootstrapped.
Day one, did you have that understanding on day one?
No, look, it took a little while to get it. So we started working with the big banks, and we were making revenue and working on building platforms for them. And we made a lot of revenue, but we realized that if we wanted to start our own bank, we would need to raise hundreds of millions. And so we decided not to, and we bootstrapped it, and we used revenue to fund the business because there's so many different ways to fund businesses. And we did try to go out and raise a round, and we went to raise a $70 million sort of seed round, which would have been the largest seed round in Australian history. And we had most of that capital tied up, committed. The main issue for us was finding an Australian investor that would lead the round. And we just could not find a single venture capitalist in Australia to lead the round. So if we were going to go down the venture capital path, it was going to be very, very difficult to raise that type of money in Australia. And so we then ended up looking overseas to see whether or not we could find suitable leads for our seed round. And what happened was we were talking to Bendigo about this challenge, and Bendigo were our bank partner, and they introduced us to Goldman Sachs. And then in all the meetings that Goldman Sachs took us to meet all these venture capitalists and other different sources of capital as well, not just venture. But when we went to all these different types of meetings, we ended up having M&A conversations and all sorts of things. And we invited Bendigo to every meeting. And they're our business partner, joint venture partner and up. And so I think sort of from my perspective, they were sitting in every meeting as we were trying to raise capital. And they were like, what is it that we're missing out on? So we ended up going down an M&A route where they bought the company rather than us raising capital. And that meant that we had funding secured. It meant that, the team could stay on, and out of the 63 people, 61 people stayed with Up after acquisition. And there's still 50 something of them there now, nearly 4 years later. So, the acquisition path was a way that we ended up raising the capital, and then now Bendigo funds it from their balance sheet. So I think thinking about how you raise that quantum of capital and what are the sources is a little bit of a different problem than a typical sort of more traditional startup that might be raising 1 million, 5 million, 10 million, 20 million. There's different solutions for those type of amounts of capital as well. And I have been in that position because, say, for example, with PIN payments, that's what we did. We raised a small amount of capital ourselves, some seed capital. We did some convertible notes. We went out to market to get some venture, and we had some venture capitals come on the cap table as well. So I have been in the situation we've had to borrow or beg, borrow, and steal. They usually say, but we had to find other sources of capital, and sometimes that included debt funding. Sometimes that included asset loans. All sorts of different ways that we looked at. Well, what are the types of capital that are available in the market, and then how do we fund the appropriate business with the appropriate type of capital?
Yeah, exactly right. That's what I'm talking about a lot lately. Just knowing the journey for founders, knowing where you want to end up is the biggest thing, and then you can work out what sort of path you want to take to capital. And different companies need different sort of capital. So yeah, it's really interesting to hear that, because I think people still think that to be a successful startup, you need to take VC capital.
And so sometimes taking VC capital is the worst thing for a business. And we've invested in 23 venture capital firms, so we indirectly are in thousands of companies. Yes. So I would say that we're proponents for venture capital, but at the same time, we're aware that across the spectrum for startups, you've got angel investing, the bank of mum and dad, you've got syndicates, you've got debt funding, you've got private equity, you've got venture capital, you've got loans from banks. There's so many different sources of capital, inventory finance and all these other things. So there's so many different sources of capital that really it depends on the type of startup, the type of business, whether it's growth capital, whether it's seed capital, whether it's a follow-on round, whether it's capital for scale. There's lots of different types of capital that are suitable for purpose. And I think that's actually one of the reasons that we got so attracted to investing in Tractor in a big way, is so that we can help fuel the startup ecosystem in Australia and hopefully beyond. And it's the type of funding that Tractor provides is suitable for most startups, even if they don't realize it. So if they're pre-revenue, if they're post-revenue and they're into profit, if they're looking at growth capital, they don't have to choose venture. You can choose other sources of funding, including the type of funding that Tractor provides. And I think that has always been, as an investor, that's been really attractive for us in backing Tractor and backing the team to scale the business. I was actually looking at how much capital Tractor had deployed recently and talking to Matter. And, I think that we're on a sort of parallel trajectory. With my family office deploying capital in a few different ways, and then Tractor deploying capital in a few different ways. And I just think that that's been a really interesting journey over the last few years to see how that's playing out.
Yeah, that is interesting, because I think I read that AFR article where you deployed 76 million or something. That was that start of the year or last year?
Yeah, I think we're up to about 85 now.
Okay, yeah.
So we've been spending it pretty quick, but I think the goal for us is to get to about 100 million, because to be a serious family office, you have to have 100 million in capital, really. And most of it sits in assets for us now, because a lot of that capital's been deployed. And because it's my money, there's none left. I have to make more money before I can deploy it. So actually, it's one of the reasons why we launched Triple Bubble, which is our fintech fund recently, is because it means that instead of it always being my money, it's actually other people's money. Yes. A lot of people will say to me, how can I invest in the same things that you're investing in? And so what we do is we refer them to Tractor, for example, or we refer them to some of our venture capital firms that we've invested in. Or now that we have our own fund for fintech investments in Triple Bubble, we refer them to Triple Bubble and say, become an investor in Triple Bubble, and then you get the exposure to the same things that I'm investing in.
Yeah, that's great. Yeah, well, I think we're up to nearly 95 million so far. We're very excited. It won't be long. We'll hit the 100 that we've deployed, which is
totally awesome.
So, it's we're part of the Dom multiplier effect.
That's nice. Yeah.
That's awesome. That's such a great summary of all the different types of experiences you've had and things that you're investing in, and great advice. Can I just ask one more question, I guess, to round us out about, what would you, on funding or just generally looking at growth for a startup, for a founder, what would your key advice be?
I think the type of industry that you're operating in, and then the type of capital that you're looking to raise, can actually destroy a business or create an extremely successful business. And so you have to be strategic in the people that you recruit. Like, businesses are all about people, and then secondary to people is obviously culture, and then very, very close to that is the capital that you need. Because without the capital, the business is literally starved of breath. It can't survive. It has no water, has no food, no fuel. And the Tractor fuel, the analogy is actually a really, really strong one, because without that fuel, you just can't operate. So for me, it's like always people first, and then the behavior of those people and the culture that those people develop is most critical to any startup. But the people can't survive if you can't pay the salaries, if you can't pay the rent, if you can't pay for the manufacture of your products. If you don't have enough capital each month to make payroll or to make the monthly payments, you're in all sorts of strife. So I think that my advice for people would be to seek out the sources of capital that are most suited to your type of business, and don't be afraid to ask. Like, nobody has ever asked Tractor and then something bad has come of it, because you guys are always really friendly. You look at people's balance sheet, you look at their business plan, you understand where their business is at, and then you can say to them, look, Tractor's just not for you. We're not the right type of capital for you.
That's right.
We are the right type of capital, so here's what we can structure for you, and this is how we can help you grow your business. So I think the best sort of advice from my perspective is to reach out and ask, because even if you don't know and you're looking on the website and you're just not quite sure if it's right for you, just ask the question, because someone will be able to help you through it. So that's probably the advice.
I think that's across the ecosystem. Like any VC will talk to you as well. Any like angel investor, everyone wants to not miss out on the best opportunities, and everyone, I think it is generally a friendly ecosystem, and definitely Tractor. We'd love to. I think a lot of people qualify themselves out when they shouldn't. They should absolutely reach out and ask the question. I think that's really good advice.
Well, I think also it's about a relationship, right? So even if the type of capital that Tractor is providing is not right for that business right now, once the relationship has started and you're talking to each other, it might be 1 year or 2 year or 3 years down the track, and then the business is ripe for Tractor capital. So I think that the fuel sort of analogy is a good one, because you're thinking about what are the best sources of this fuel for my business right now. And then how do I look into the future and think about building those relationships with venture capitalists, with private equity firms, with banks, and with organizations like Tractor that are providing alternative finance.
No, brilliant. Very well said. One last question you just prompted me to think of. A lot of founders do worry that if they've got debt on their balance sheet, when they go to raise an equity round, they worry that investors think it's bad that they've got debt. How do you feel about that?
I don't think investors are too worried about debt when they're looking at a business holistically. So most investors would be looking at the runway of the business, the revenue of the business, the profitability margin of the business, trying to work out what's the return on investment, what does a discounted cash flow look like, all those sort of things. And so really it's just part of the mix. It's like a puzzle. And one of the puzzle pieces might include some debt. That's fine. I don't think it makes a big deal. If there is an investor that is concerned about it, well, let me tell you, there's lots of them that aren't. So just shop around and find one that understands your business and is happy to get those pieces of the puzzle and put them together in the right way.
Yeah, brilliant. That's so great. Thank you so much, Dom. So it was such a great conversation, and you speak very well on behalf of Tractor. So thank you very much.
No worries at all. Thanks for having me on.